Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, and this video contains a lot of new and updated information, so please make sure to check out the timestamps and watch the probabilities at the end of this video. Enjoy the ride. Starting with the first bullish scenario on the weekly time frame, looking for an impulse 1, 2, 3, 4, 5. Currently working on this wave 3 with an internal green count 1, 2, 3, 4, 5, right? Common target for 4 is on the chart. That's the green box. Invalidation is the 0.618 at 49.3k. And after this wave 4, we look for continuation to the upside in a wave 5. The second bullish scenario is that wave 3 is already finished. So here we have a wave 1, 2, 3, looking for 4, and then a final push to the upside in a wave 5. The common target for your wave 4 is the 236 to the 0.5 Fibonacci taken from the low to the high of wave 3, giving you a target between 57.2k and 42.8k, with the invalidation being 37.7k. Now this scenario in particular becomes more interesting when one of the lower time frame scenarios is going to play out that I'm going to cover at the end of this video. So I will come back to this weekly time frame scenario at a later stage, because what I first want to do is very shortly talk about all of the potential scenarios in this range and very quickly say why are they low, medium or high probability. Starting with the triangle, probabilities low. Reasoning is twofold. It has to do with wave A as well as wave B. First of all of the waves in a triangle have to be zigzag structures, except one, right? One can be a double or triple zigzag, by far most common wave C or wave D. If we look at wave A, we need a 535 in here. The problem is your wave is C as wave 4 inside wave C, and a 1, 2, 3, 4, 5 wave move to the downside in a bigger zigzag ABC. Wave 4 is either 6 times longer or even longer, I believe, than wave 2 in time, which is incredibly rare, or wave 4 hit the 0.618, which is an invalidation. Second, wave B has to be a WXY. As mentioned, if one of the waves is a complex structure, it is by far most commonly wave C or wave D, so the fact wave B has to be counted as a WXY significantly reduces the probabilities for any triangle. Lastly, a triangle really only becomes relevant when wave D is in. Make sure to check out the educational playlist on my channel. Second one is a flat. In a flat, we're looking for an ABC. Probabilities low. Reasoning, the 0.9 minimum target for wave B has not been touched. Another reason is that if this here would be a wave B, then wave B by itself is a flat in an ABC in a bigger flat for ABC. And a flat wave B, ABC, in a bigger flat, ABC, is incredibly rare, lowering the probabilities. The bullish scenario where the low is in and then look for 1, 2 and continuation, probabilities low. Reasoning, on some charts the 886 has been hit and we have a truncation in wave 1, 1, 2, 3, 4, 5. Some charts took this high, some other charts like this one here did not take this high, meaning you have a truncation, and a truncation is very, very rare. Besides, since this low has been made, I've been talking about the fact that this low is not a great end of the wave 4 price action and the range. A scenario that has higher probabilities is this sideways double combo WXY, a 3-wave corrective structure after which we then look for continuation to the upside. However, what does impact the probabilities negatively in this scenario is wave X. Wave X here is an expanding flat, ABC, meaning wave C has to be a 5-wave structure, 1, 2, 3, 4, 5. But just like with the bullish scenario, counting a 1, 2 continuation to the upside, with wave 1 having a truncation, wave C also has that same truncation, 1, 2, 3, 4, 5, and on some charts, wave 5 did not take the high of your wave 3. And the truncation is very rare, lowering the probabilities for a wave C, a 5-wave structure, to the upside. Secondly, if this is a wave C, it is over twice the length of A plus B, which significantly reduces the probabilities of a wave C as well in an expanding flat. Now in this case, the target area for your wave Y has been reached, which is the yellow box on the chart between 63.2 and 54.4k. And in wave Y, we're then counting a zigzag to the downside in ABC, and your wave C target has been reached as well between the 1 and the 1.236. Now if we then zoom in to the ABC zigzag here to the downside, then this is what we are looking for. So remember, we are looking to finish that wave Y on the higher time frame at the low here and then move towards the upside. So in this case, what we are then looking for is a 5-wave leading diagonal in a wave A where all of the waves are 3-wave structures. So wave 1, 2, 3, 4, and 5. Then have a running flat, a 3-wave A, 3-wave B, and a 5-wave diagonal C to finish your wave B here, and then a final 1, 2, 3, 4, 5. The reason why a running flat here is an option is because, first of all, this structure to the downside has a higher probability of being a 3-wave structure. This retracement to the upside here was incredibly short for a wave 2, for a potential 1, 2, 3, 4, 5. And also the overlap in this second leg to the downside, you can't really count a nice wave 3 in a 1, 2, and then a 3, 4, 5. So a 3-wave structure works nice in a wave B. And this move to the upside counts actually as a very nice diagonal, but we never had a bigger zigzag to the upside and then continued down. After this diagonal to the upside, we immediately return to lower prices. So therefore, the probabilities are there to label this a wave C, to finish B in a running flat, and then look for price to move down in a 1, 2, 3, 4, 5, touching the common target area for your wave C. Now, preferably, therefore, your ABC zigzag is finished, which means that preferably your WXY corrective structure on the daily time frame is finished, and you're going to continue towards the upside, which means that locally we now want to count impulsive structures to the upside, where this is your low and we're looking for a wave 1, 2 and continuation to the upside in a bigger wave 3. Now in this case, the first structure to the upside here has a lot of overlap, which you can see, which means we have to start thinking about diagonals. And here we have a diagonal, 1, 2, 3, 4, preferably 5 is finished, because if 5 would have moved up to 62.7k, this diagonal would have been invalidated. So preferably your first move to the upside here is already finished, and that is your wave 1. And we're looking for a wave 2 to the downside. Now, wave 2 can be any corrective structure except a triangle, can be a zigzag move, it can be a flat structure. It doesn't matter, but what we do want to see is wave 2 moving into the 05 to 786 Fibonacci target area, which is the most common target area for a wave 2, taken from the low to the high of your wave 1, giving you a target between 60.4k and 59.2k. The 382 is an uncommon target, but a target nonetheless at 60.9k, and the 886 at 58.8k is a level you do not want to see hit. The moment you hit that 886, the probabilities are higher to take this low, which means the probabilities are higher for more bearish scenarios, which I will cover in a second. Preferably, this wave 2 is also finishing after the 0.382 Fib time taken from the start to the end of wave 1, which is sitting on the 26th of June, 3:30 p.m. Central European Time, which is, in other words, later today. After wave 2, we want to see some proof of support and strong continuation to the upside. In this target area, I have pretty much one area of additional support, which is the blue box here between 60.2k and 60.4k. Of course, the golden pocket is also always an interesting level, but there's not too much additional support around that area. The final scenario on the daily time frame, which also has increased probabilities compared to some of the scenarios shown earlier, is a zigzag to the downside in a 5-3 5-wave structure. Leading diagonal in a wave A, 1, 2, 3, 4, 5, 3-wave corrective structure in wave B, a WXY, not ideal as wave Y on some charts didn't take the high of W, and also generally a minimum target for Y is the 0.618, which hasn't been reached, but we have to sometimes take it with a grain of salt. And then we look for a wave C towards the downside. Now the common target area for your wave C is between the 1 and the 1.618, 54.6k, 43.9k. And this is the reason why on the weekly time frame, I also now included this wave 4, because the target area for your wave C includes a 43.9k target of the 1.618, which of course would invalidate this bullish scenario, as then you move below 49.3k, which means this scenario will then increase in probability. So that is why this is so relevant. As you can see here, the max target 1.618, 43.9k for wave C, below 49.3k to invalidate that one bullish scenario. Now in this case, we are then looking for an impulse to the downside on the lower time frame. So if we then zoom in to the 4-hour time frame, then we have a double 1-2. Your first wave 1 is a leading diagonal again, 1, 2, 3, 4, and then a wave of 5 in a wave 1. Then we have a running flat in our wave 2 and look for another wave 1, 2 continuation to the downside. Now, minimum target for wave 3 generally is the 1.618, and I color-coded the two 1.618s, the one in blue for the blue 1, 2, 3 down, as well as in white. But you can see that the one in white is already below the one in blue, so likely the blue wave 3 is going to extend, which is exactly what you like to see in an impulse. But then the minimum target would be at least 52.5k, if not lower, right? So the probabilities increase to move to the lower 50s or continue into the 40s. Now in this scenario, the invalidation is very, very clear. Moving above 64.5k before making another low increases the probability to continue this range and move towards the upside. This is your bullish sign. At the moment though, if we're looking for a wave 1 and a 2 and then a 3 to the downside, the common target for your wave 2 is the golden pocket to the 786, taken from the high to the low of the wide wave 1, 62.2 to 63.2k. You don't want to hit the 886 as a wave 2. If price moves towards that 886, it will already increase some probabilities for the bulls to take out this high sooner or later, 63.8k. Time-wise, this wave 2 is already looking perfectly fine. Over here we have the 0.382 taken from the start to the end of your wave 1 to compare 1 in time with 2 in time. Minimum target for 2 would be the 382, and this high here is made after the 0.382. So there is always that potential where this is already a finished 3-wave structure and we continue down, but that means we need to see impulsive structures locally. I will come back to this when talking about probabilities. However, in this wave 2, we can also look for a bigger zigzag, which is a common structure in a wave 2. Now, the diagonal here is labeled as a wave A. 1, 2, 3, 4, 5 wave A. We look for a B, a C to the upside, reject, and continue towards the downside. Common target for your wave B is the 382 to the 886, taken from the low to the high of A, 60.9k, 58.8k. Your most common target area though is the 786 to the 05 area on the chart. In this case though, we want to see a corrective structure to the downside in B, another impulsive move up in C, finish C, and then continue towards the downside. And if we then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenarios as shown. Either or doesn't really matter, as the probabilities are much higher still for a bull market continuation compared to a bear market. On the daily time frame, the probabilities are highest for the zigzag to the downside in an ABC or the WXY continuation to the upside. Both of these, however, have something that is not that ideal, right? So in the WXY here, then wave X has a wave C with a truncated 5, and wave C and wave X is long as explained. And in the zigzag ABC, your wave B has to be a WXY with a very short wave Y, and on some charts wave Y didn't go above your wave W. So there is something that isn't that ideal. However, these two scenarios have higher probabilities than the triangle, than the flat, and then the bullish scenario. Now the probabilities, however, of the zigzag A, B, and continuation down in C, or a finished WXY continuation up, depends on the local price action on the 15-minute time frame at the moment. If we get a corrective structure to the upside here and impulsive moves down, we're going to be looking for the zigzag A, B, C to the downside. If we get impulsive structures up 1, 2, 3 and corrective moves to the downside, we're going to be bullish with a finished WXY. What this means on the lower time frame is that you're going to be looking for impulsive structures up in a 1, 2 and then a wave 3 to the upside where you want to break 64.5k. If you can take 64.5k, the probabilities will switch bullish. For the bears, we are looking for corrective structures to the upside, no continuation above 64.5k, and look for impulsive high volume structures towards the downside as we are looking for a wave 3 to come to much lower prices. On the 15-minute, however, in this structure over here, in both cases, we are at the moment still looking for price to move down into the fib target area between the 382 and the 886, and then we can observe the reaction. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.